How and when will this Vancouver real estate market ever slow down? Hello, and welcome back to the Vancouver Life Real Estate Podcast and YouTube channel. Today, we are talking about the Vancouver real estate market and if, when, and how it will ever slow down. I think wherever you are right now, it's probably all but impossible to ignore what's happening in the market. It's all over the media headlines. I'm sure your friends, your colleagues, your family, you're hearing about it at dinner conversations. It's just sort of the talk of the town right now.
It definitely is. I mean, I would even venture to say that, people that used to be realtors are coming out of the woodworks again. We're seeing it spill over, not just in single family homes anymore too. We're seeing it spill over everywhere. There is a real fear of missing out right now. I think you're really seeing economic behavior of people that are, feel like they might be missing the boat. And just remember, you buy the rumor and you sell the news. But
well said. Well said. We've been talking about record-breaking sales and sale prices for, about 5-6 months now. And the thing is, it's still continuing, right? We've talked and we've mentioned before that March, we're still on pace to have the all-time highest sales volume month ever recorded for any month. And all three price point indicators are going to be at an all-time high this month. That's median, that's average, and that's HPI price will all be at record highs this month.
Yeah. So you want to make sure that when you're reading that, though, that it's put into perspective too, because the stats that are going to be compared to a year ago are going to look terrible. A year ago, the real estate market more or less shut down in March, right? And so when you see year over year growth, it's going to be up by some staggering numbers, which when that hits, the general public doesn't always put things into perspective, right? And we know the media loves to sell a headline. So be prepared for maybe a little bit more of this FOMO that you're currently experiencing, because yes, people know it's a hot market, but just wait until these stats hit.
Yeah, it's so true, right? People are going to really feel it based on these headlines and just the sort of the public push of it, because the numbers are going to be, like you said, so staggering, right? We can expect April sales volumes to be in and around 300 to 400% over the previous April. But again, that's a total outlier based on, a pandemic shutdown. So make sure to read beyond that headline for sure. But I think it's really begging the question, or maybe we'll step back a sec here. There's a lot of reminiscence. There's a lot of deja vu going on right now of 2016, right? Especially for those that were in the market or paying attention closely to the real estate market, because that was sort of the last time it was at this frenzied pace, right? Pretty much all the stats that we relate to as far as the previous record, it was all around 2016, 2017, right? We were seeing that double-digit appreciation. We were seeing record-breaking sales volumes. Now, what happened then, of course, was so much public outcry, a lot of finger pointing, but ultimately policymakers did come in and put some suppression techniques to slow things down, and it worked. So the question I guess we're asking today—
temporarily.
Well, that's it, right? Here we are 3, 4 years later, and we're at all-time highs again.
Yeah.
So, we're asking, is something similar going to happen? What and when and if what's going to happen that's going to curb this rate of sales volumes and sales appreciation rates?
I think too, when you really look at, when you're trying to predict what's going to happen in the future, your best indicator is the past, right? The trend is your friend. And so when you're looking at these things, you're trying to determine if the set of circumstances back in 2016 were similar to where they are now. And it's not quite the same. In fact, there's some pretty big fundamental differences. And, the other thing that, when Dan mentioned, what are we, 4 years ago, 5 years ago, where we were at all-time highs, right? And so, what's your typical real estate market? I mean, 8-9 years is typical, right? And then 2 years of kind of sort of adjustments, right? Corrections, and then back on to another cycle. But now we're starting to see these cycles happen in 5 years, in 6 years, right? So, it's starting to beg the question, is something fundamentally changed um, on a macro level, right? Certainly in 2016, we didn't have a pandemic, right? That's certainly the case. But we also had far more supply. We didn't have certain taxes that are in place now. And yet here we are. All of those measures that we're trying to put in place to suppress the market only pushed it further down the line. And now the problem's rearing its ugly head again, right?
Yeah.
And
A lot of people were liking and pointing trying to point the blame, I guess is what I'm trying to say here, on quote unquote foreign buyers. Like they were
yeah,
completely responsible for propping up the market and increasing prices. And the BC Real Estate Association just came out with an expose just last week that basically said foreign buyers in 2020 were basically and understandably non-existent, right?
yep.
There was less than 1%, I think, or less than half of 1% of foreign buyer purchases of BC real estate. And yet we saw 18% appreciation rates. So you can basically push that out the window and say, okay, well, that wasn't the cause this year.
It also begs the question, were you generally misled?
Yeah.
Because I feel like we were, and unfair finger pointing took place, and a lot of people are looking at the kind of the coronavirus as oh well, there are all these reasons, the coronavirus is causing that's increasing the price of real estate or doing something to the real estate market. I really think you should look at the coronavirus as a spotlight on the things that were already a problem in the real estate market. It created some new things, but let's be honest. If people were really thinking about making the move to the suburbs, they probably just made it sooner than they were going to anyways, right? So the coronavirus, if anything, was a catalyst to a lot of decisions that were already in people's heads. And then when you lowered interest rates, you just made it possible, right? So I think you saw a lot of that happen in the last year, but the problems that we had back in 2016 are still the problems that we have now. And
Yeah.
those problems are a fundamental supply issue, right? We've talked about it for a long time, and I just, it's going to be the case for some time, right?
Yeah. We are literally at record low inventory right now. Okay. This is something that since this data was tracked, the charts now show that we have all-time lowest inventory. And this is, of course, happening nationally. And here's the thing. The last time this issue, this price appreciation rate issue existed, of course, the government decided to tax the demand, right? Not fix the supply, but tax the demand, right? Oh, it's foreigners, we'll tax them. Oh, it's speculators, we'll tax them. Oh, it's investors who are leaving their properties empty, let's tax them. Okay, this is 3, 4, 5 years after these taxes. Can you point to anyone who can tell me that housing has become more affordable because of those tax implication measures? Where are these affordable homes? Where are all those tax dollars going to help the supply issue?
They honestly, Dan, I don't think they went there.
That's very possible too, right?
Well,
Either way,
there's no transparency around it. So how do we know?
Mm-hmm.
At the end of the day, right? The government holds all the cards, and I can't for the life of me figure out why is it so difficult to make sweeping zoning changes. Things like, I get that there's going to be a population of people they're going to be disgruntled by it, but it's also a reality of modern times. The fact that if Canada is going to bring in 400,000 people next year, where are they going to live? They're not all going to buy single family homes. They can't, right? So what are we doing for that? How are we planning for that?
Yeah, that's a good question. I think we should almost throw it out to our listeners today too. Like, do you know someone at the city? Do you know someone responsible for zoning? Because we'd love to have them come in and be interviewed,
Yeah.
right?
Oh,
There's
I'd
so
love
much
that.
we don't know about the process, and we would love to get educated on it and share that information with you.
Yeah. And look, we're taking this position because it's what we believe to be the fact. But, at the end of the day, if somebody can come on here and tell me otherwise, I'm all ears. Right.
Yeah.
And just based on what we see and what we hear and who we deal with, this seems to be one of the biggest issues. Right. And then when you look back in 2016, it was an issue then, right? It's an issue now. But the circumstances in 2016 honestly were better for the government than they are now, because now the government's in a tricky situation. They're caught between a rock and a hard place, where they've got a marketplace for, single family homes and real estate in general that is exploding and becoming incredibly unaffordable. And yet the other parts of the economy just aren't turning.
Mm-hmm.
So you can't just turn off the interest rates, or turn them up, sorry, to cool that down without suppressing the rest of the economy and going back to, I don't even know where that would go, but it would be a terrible place. So, the response that the government is putting out right now is just that, well, we're going to run hot. We're going to let the real estate market run. And okay, because, you got to sacrifice a smaller piece of the economy for the greater economy. But again, the issues are because the reason that the big reason here that the government can't raise rates is because if they do, they can't afford to pay their own debts. So that's why they have to hold rates low, which means the asset price, your quantitative easing, is happening.
That's the truth. Yeah. And I mean, we just had the Fed down south just last week, right? They held their rates again, and again, promised to extend these for a couple more years. And the Bank of Canada has done the same, right? This resounding number of 2023 of holding rates still exists, and they're holding tight to it. And I think something that we have to recognize and share with people is, you can't run to the Bank of Canada and say, increase rates because houses are getting too expensive. Mm-hmm. Keep in mind, the Bank of Canada does not have a housing price agenda. That's not their quote unquote job. That's not on their task list, right? They're trying to target that 2% inflation annually. And ultimately, if someone comes crying to them and says, look, you have to raise rates to slow appreciation rates of housing, it's going to fall on deaf ears. It's not their responsibility.
Well, and so if their responsibility is the economy, generally speaking, and to get that thing turning. So here's where it gets interesting. So housing is shooting up right now in price, right? So let's play the game out for a little bit here. It continues to go that way, right? Until the economy reaches an inflationary position that is in line with the Bank of Canada, right? Then all of a sudden you're going to start to see interest rates rise to cool inflation, right? Certainly house prices will teeter off at that point, to a point, because once everybody in the economy is back working and everything is moving forward again, and you're starting to see more robust numbers coming out of the economy, what are those people going to do? They're going to want to buy a bigger place. They're going to want to spend their money, right? And so the housing problem will persist at another level. It'll become more expensive and even more unaffordable. And the same problems are going to exist, but at a higher price point. And that's quantitative easing, right? Mm-hmm. And I don't see, in 44 years, we haven't seen a massive correction. So
no.
It begs the question, is one ever coming? That's one. Two, I think you're going to see constant corrections all the time. That's what I actually think you're going to see, but they're not, I think you're going to see more volatility, and I think you're going to see that happen, more drastic price changes that happen faster cyclical periods, more money's being printed. I just don't see how it slows down. I think it's on a path of increasing, right?
Mm-hmm. Yeah. And let's touch on this too. I mean, let's remember, while the Bank of Canada may have committed to a couple more years of rock bottom rates here, banks can and have increased some of their rates, right? The fixed rates we're talking about, up about 60 to 80 basis points since hitting the bottom. Yeah. Right. And it's, in talking to a lender this morning, he said internally, they're talking about another increase by about summer, and you can expect fixed rates to be in and around 2.5%. So what does that mean? Is that going to slow it somewhat? A bit, right? Sure. But let's keep in mind here, 2.5% is still very near all-time lows, right? Almost near the bottom. Let's give an example here too of like, okay, people are saying, oh, okay, we need interest rates to increase to slow housing. Now, people ultimately, yes, you buy a home, but you're ultimately buying your payments, right? Mm-hmm. Like you're buying what you can afford. I can afford X per month, and that's how the bank essentially comes up with their number.
Like you're buying your payments.
Yeah, you're buying a payment every month. Yeah. So on your average home today, right, $1,086,000-ish, we are. Your mortgage is going to be about $870,000. let's use a 2.19% rate for today. That's going to run you about $3,300 per month. If that doubles, if that rate doubles to 4.39%, your payments increase by about $1,000 a month, right? This is just your mortgage, of course, we're talking about, right? So now you're at $4,300 a month for that same Vancouver home.
Wow.
Yeah, I mean, that's a 30%, 33% increase in payment.
Yeah, I mean that would I mean, we know housing prices are more or less controlled by the interest rate, which is really interesting because I mean, local supply and demand are a big fundamental piece of that too, but the activity is around interest rates. And when you have the Bank of Canada in control of interest rates, but don't have a housing mandate, it's sucking and blowing at the same time.
Yeah, it's a fun analogy. But okay, so and I guess, yeah, that kind of makes me think of something else. There is no governing body to control housing prices.
Right.
In a sense, right? There's no singular body that says, okay, like the BOC, we're going to try to target 4% annual appreciation on Vancouver homes max, and we'll do everything we can to control that number, right? There's nobody sitting there pulling those levers independently.
Yeah, or has a price target or anything like that in mind.
That's it. So whether you love this rate of appreciation or you absolutely hate it, or you're indifferent, either way, there's no one directly to go to and say, hey, can you please do something about this?
Yeah.
You know, it feels like it's the government, but they bow to public outcry.
Well, and pressure, right? They're looking for votes at the same time. And you got to consider the fact that I think it's something like 76% of Canadians are homeowners, right? So if you take that kind of number into play, who are they going to listen to? They're not going to listen to the buyers. They're going to listen to the people. First-time homeowners, I mean, it's of the voting populace, right? Like you're a small portion of the voting populace. And so it's better that you understand the rules of the game and how the game is being played so that you can kind of work to that than it is to try and complain about anything. It's just not going to help. Right. I think at the end of the day, you got to figure out how to win. And that's what this comes in, right? This kind of education. And
so let's talk more about what may potentially happen here.
Yeah.
Okay. We talked about Bank of Canada probably holding, but that can change too. Banks already have started increasing rates. That will have a direct effect, though they're going to have to go a lot higher than 2.5% to really, really slow things down.
Yeah.
So the Fed steps in, and we obviously look to history, like you touched on before, Ryan, and taxation is obviously the easiest move and probably the most expected because, of course, building faster essentially not an option. Building more is not an option, at least not a quick option, right? Yeah. Whereas at the stroke of a pen, you can tax the crap out of any house here.
Yeah. Or out of any particular income bracket.
Right. So personally, I think, an increase in property transfer tax is an easy one. They do that repeatedly. It's a massive cash grab. Doesn't even exist to our province to the east there in Alberta, right? They don't have a transfer tax, but in BC we do, and it can easily increase. And just like what happened again in 2017 here, things like school taxes could be kind of created or increased.
Yeah. I mean, you'll also see things potentially like shorter amortization periods. Your 30-year mortgage will go down to 25, right? That'll bump up the payments. There's other podcasts that we've had where we've talked about these levers, right? And these are some of the levers that are at the disposal of the federal government. And believe you me, I think, before raising interest rates, they'll pull these for sure.
Yes. Yeah, I fully agree. Right. We've touched on and talked about what happened in New Zealand recently, where they have mandated a minimum now of a 20% minimum down payment for primary residence. And I believe it's 30% for an investment property, but that's getting increased to a 40%, I think by May.
Wow.
And that'll work. That will have an effect. I mean, the 20% down in Vancouver wouldn't affect too much because, to be honest, most homes are being bought with 20% down. I think upwards of 80, 90%.
Yeah.
But it would have some effect for sure. But what if that's 25%? What if that's 30% on primary, right? That's one potential lever to pull.
Yeah. I guess the other interesting piece of the taxation is how much of this taxation is actually going to affect the the balance of the market, not the real estate market, the economic marketplace as a whole, right? Because if you tax higher income brackets too much, they're not going to start a business that would pay other people to go to work, and so it's a very, very fine line that I think they're going to play. But generally speaking, it's usually the wealthy people that have the room to deal with taxation, and so they're the ones that typically have to face it.
That's right. Yeah, I think taxation will likely come down on the higher end. But again, there's going to be outcry there, right? Someone who
Yeah,
owns, a beautiful house on the west side, and just because they've lived in their home for 25 years means they deserve to be taxed more. I mean, not
that's
that there's any
crazy.
fair way to look at this, but
Nope.
it's a tough decision, of course, right? You've got to.
Yeah, it's not going to make everybody happy.
Well, taxes make very few people happy, but yeah.
Yeah, and again, just as a personal anecdote, like I just don't believe that this is going to help solve the issue.
Mm-hmm. We also have seen, obviously the stress test, right? That was created only 4 years ago, and something like that could be created, or of course increased, right? Now, instead of qualifying at, let's say 2.5% above the posted rate, what if that jumps to 5%? That's going to immediately squeeze some people out of the market again, which then reduces your demand.
If I may though, last time they raised the stress test, it hurt first time buyers.
Mm-hmm.
It hurt the bottom part of the market because those are the people that are most affected by that, right? And those are the people that need the most help. So I'm not convinced again that a stress test will work, but I'm also convinced that they might try it.
Yeah. Well, and then again, here we are 4 years later, right? All-time high record
Exactly.
prices.
Exactly. Just further down the line.
Yeah, that's right. I mean, again, kind of based on history, based on what we saw in 2016, 2017, I think, and I originally thought as well, that we all expect suppression techniques to come into play.
Yeah.
But here's maybe an unpopular or uncommon idea or thought, and that's what if nothing happens? How does this play out if no policies are implemented to suppress the rate of appreciation that we're seeing right now?
You mean if we don't artificially influence the marketplace?
Right.
Yeah. You would get fundamental supply and demand economics that would take over, right? Which is what really should be taking place here because they're the issues at play. Those are the main fundamental issues. And what you'll see very quickly is, I think you'll see the continuation of less and less supply. And that will increase with demand as the borders open. Price goes up at the end of the day. The government will eventually start raising the interest rates just to keep everything in line with inflation.
Mm-hmm. I do think though there has to be at some level a point where it tapers off, right? People are going to or prices will hit
A ceiling for sure.
a bit of a ceiling, right? That people are like, okay, well, I can't afford a typical $2 million home, for example. And so, yeah, you just see kind of everything burning in and around, I don't know, 1.1 million kind of thing, because that becomes the affordability factor.
Yeah. And again, I don't know where those levels end, right? And I'm not sure. I mean, they have to have some sort of relationship with income at the end of the day if we're talking
Mm-hmm.
about, supply and demand. But the other thing that doesn't, often get talked about in Vancouver, and it might be particular to Vancouver, is a lot of money moves between families here when it comes to real estate. That's where the vast majority of family household wealth is created. And so, people from outside of Vancouver always go, it's a bubble because, nobody can pay. And we did a podcast on this, 13 times your annual salary for your property. It's just impossible. And the answer to that is you're right. But, when your parents made, 300 or 400% on their house, and that money then gets gifted to you as your down payment, all of a sudden affordability is actually in play.
Mm-hmm.
And the cycle will perpetuate as it continues to appreciate, right?
Yes. Yeah. But that, of course, implies that it may have to continue to appreciate,
It will.
which, it can go either way. And let's also remember what just happened recently here with this reduction in interest rates. We talked early on how people suddenly had about a 10% more buying power. right? Their dollar went 10% further. And then what immediately happened in real estate prices? They went up by 10% in a
Shock.
sense, right? Yeah. People in essence will buy at their ceiling. They
Yeah.
just do, right?
Yeah.
That's human nature. But if this kind of continues to, I don't know, let's just say go at its own pace, be reminiscent of a quote unquote free market, um, I feel like it would level out. It's obviously cannot sustain
Of
what
course.
2.5% per month, right? There's going to be a
No.
ceiling where people are just priced out, and yeah, that's when I think, okay, the detached market is now gone. Townhomes are escalating fast, and I think this is partially why we're seeing condos taking off now, is because they're sort of the next affordable house,
Yeah,
right? And so
that's
you're
right.
going to see right now, I think there's a big divide in price between obviously a detached and a condo. Of course, per foot it's a lot closer, but if suddenly all that the majority of buyers can afford are condos, what's going to happen to that asset class as well, right? And they're all just going to kind of start to do this and get
That's right.
all a little bit closer to one another
Yeah,
as far as the pricing goes.
and historically, when we've seen different asset classes take off, it's normally, the single family is the leader, right? And then the other asset classes follow in behind. Townhomes are usually the ones to go after that, and then condos happen after that, and that's a spillover effect. That is something that we've seen before, and something that I think you'll see again. Well, we are seeing it. It's not that we're going to see it again. My question is it happening faster and faster and faster, right? Because it appears to be. I mean, if you look at today's circumstances and you look at them versus 2016, we're printing way more money than we've ever printed before, right? We're trying to increase inflation. 2016, I don't think we were trying to do that.
Mm-hmm.
Our government has, I don't even know how much debt right now, but it's so much that they can barely repay it. In 2016, that was also not the case. So there's fundamental things that are changing in the marketplace. I mean, you look at the stock market too, generally speaking, it's overinflated in many ways, right? And the velocity at which things are growing and things and correcting is happening in shorter time frames and with higher ferociousness.
Mm-hmm.
So, I mean, this year alone, like, Albion, for example, went up 8% last month.
Mm-hmm.
What?
Well, yeah,
It's
and it's an outlier, but it's very real. And then, but you look even a little bit more macro here. GVRD 2.5% last month alone, and guess what? That's likely going to happen again here in March.
Yeah.
Okay, you add that with January's almost 1%. You're telling me 6% in Q1 is sustainable? I mean, we're on track for a 24% increase year over year just in GVRD. I mean, these are like outlier numbers that should not be seen as a whole.
Yeah, and we've seen it before, but again, under a different set of
Mm-hmm.
circumstances. So the question back then was apply taxes and see what happens to the circumstances. But over here, we can't really apply those same taxes, or we can't apply the same set of solutions that we had in 2016 to 2021. And that's where it's going to get interesting, because that's where we don't know if it's going to continue to rise like crazy. Is it going to taper off at some point here? I mean, the real big indicator to me is going to be one is going to be immigration. That I think is going to be a huge piece. How fast the inoculations get out, because there are people, much older people, who are terrified of this disease, and rightfully so, that aren't opening their homes up to the supply. Right. That will change as more and more people get inoculated. But then we've also got extremely low interest rates, and that's due in part to the fact that the government needs to repay their own loans, right? And so it's going to run hot. You've got all of these demand factors in play here, and nothing that's going to really help the supply.
Very true. Very true. And that almost begs the question of what if things go the other way? What if the BOC decides to lower rates, extend to 2026?
Yeah.
What if the banks drop again? Right. I know this is probably a wildly unpopular opinion, but I haven't played that scenario too often. But
No.
we are in very unique times,
Yeah,
and
it's uncharted territory, right?
right. And these are things that ultimately could happen because we don't know what's happening tomorrow. We've been surprised for the last almost 12 months in a row here now. And so, you can't throw anything out the window here as far as options.
No, and it's worth having the discussion about, because again, so many people try and predict where the marketplace is going to be, but generally speaking, most people miss all of the elements inside of the market that are driving it, right? So it's good to talk about it and try and uncover some of these things. Where we think it's going to go, it's really hard to know at this point. I mean, with what the government has recently said, I would consider that, the next year you're going to see growth. I don't know if we're going to see 24% growth. I don't know if we're going to see 34% growth or 4% growth, but I think we're going to see growth.
I think too, as always, don't buy on emotion, buy on, your economic and financial state. Have the long term in mind, right? Things are going to cycle. They do, they will, right? And
Yeah.
I think the cycle is predictable. What is not predictable is the length of time in between each one.
Yeah,
that's what's really changed, and like Ryan touched on, become a much quicker and concentrated effect.
Yeah, and if nothing else, just remember that you buy the rumor and sell the news. And all of this right now is news, right? So
well put,
if you're thinking about, well, should I be buying or should I be selling? You should be selling. And you should, if you don't have to buy, try not to.
Okay. That's it. I think for me, Ryan, anything else you want to close out on here?
No, very interesting discussion though. And yeah, excited to see what our listeners think of it.
Okay. Much appreciated as always. Any kind of comments and feedback and follows and subscribes are much appreciated. More information available at thevancouverlife.com.
You guys, we'll chat to you soon.